While he's in the air for 4 minutes,
for advanced market structure, what you want to see is something like this. Then it's supposed to actually respect here, but you want to see a sweep. Alright, so for this sweep, people begin to find ways to sell. The one thing to note is for the bearish scenario, you would like to see two sweeps. You want to see another one to confirm that price is bearish. Alright, you want to see maybe the first one, which some people like to call change of character, depending on how you see it. So, but don't rush to sell after the first one. If you are too early to the party, you might just get swept. So if you rush in, you might just get kicked out. Double break to confirm that, oh, maybe it is bearish. So this might help you moving forward. So once you see that double break, then you can continue trading the bearish structure. And then this is also what some of you would see like a flip zone and an extreme zone. So but you want to see this structural low defied, okay? So whatever price reacted on, it could be an extreme zone or whatever, but then this has created liquidity here. That's created structural liquidity here that price would like to sweep, because people want to sell. Okay, forget about the earnings, but people want to sell from here, so we end up sweeping them. All right, so when price sweeps them, price comes back and maybe creates something like this and goes up. All right, so when you see something like this, you want to check out your sweep. So you have a sweep here per se. Your sweep gives you a protected low because price has swept, so it might not have any business sweeping below this low. That's the idea. So you can bank on a low like this. If price comes back down, you can take your trades off anywhere around this low. But there's something to pay attention to is what we call liquidities. Okay, so there are different forms of liquidities that you have to pay attention to in the market. So there's what we call transactional liquidity, there is structural liquidity, there is inducement liquidity. Transactional liquidity is more like when price is actually bullish, creating higher highs and higher lows. In a bullish market, when market is breaking highs, you understand that this high is a liquidity, right? It's liquidity because people began to sell from here and they dump the market. So there are lots of orders that hang around this point. So that kind of liquidity is given a name called its transactional liquidity. Okay, let me just mark this one out. Something like this is what you can call your structural liquidity. So this is like a structural kind of setup. You might have seen things like this happen. So the regular trader, when he sees the break below this line I just highlighted, the regular trader wants to sell. So, but then, like I said, you don't sell off your first break, off your change of character. You sell after two breaks. So if you see another break, so from here it breaks again, that's when you can confirm that, oh, price has flipped bearish, that kind of thing. All right, we have what you might also want to see as inducement liquidity. So let's say in the same picture, price does something like this where you have a sweep. So you want to see price sweep though. You want to see price sweep below the previous low. Okay, you want to see price sweep below the previous low. You want to see people deceived to sell off this high, and then you want to see that high disrespected. The moment that happens, you have a new protected point, which is this low here. So price should likely not break this low because this low already swept people's liquidity. So there is more like nothing else to sweep below unless price wants to just change direction, that kind of thing. So the moment that happens, you want to trade off the low. But then in the point where there is no structural liquidity created, you just want to allow for inducement liquidity. So you want price to just sweep a little below the low. So maybe it was just a straight leg. There's nothing for price to sweep to reverse because the market was designed to take your money actually. So you want to see people's money being taken, stuff like that. So in that case, you can allow a sweep here again because this low is protected. but there was nothing to sweep, so price might just sweep it a little. More like those wick kind of sweep, it just wicks below it, and then it does a corrective move back to the upside. So things like this happen too. So these are structures to pay attention to. So let's just look at where something like this has happened on the chart. This is what the chart looks like for XAUUSD. So let me just feed your eyes on what the XAU story has been. So XAU has been quite bullish for me, from my view. I respected this whole line. So gold has been bullish so far. Can agree that gold has been bullish. Yep, we just took this eye up here. We just took that eye. So what that eye means is that transactional liquidity has been swept. Alright, so after the sweep of transactional liquidity, what usually happens most times is a reversal. So it's just the same thing as when price breaks a high in a bullish structure, it tends to reverse. Yep. So what we can be expecting here is a continuation of the old bullish trend, though. Continuation of the old bullish trend, but then we can try to expect a pullback. A pullback would be something like the trend has been something like this. So price came up here, went back to mitigate an area, swept the old transactional liquidity there, came back to mitigate the area. So now we have swept this high. We'll be expecting another, higher low to bounce off this area and then continue up. So let's just look at what happened last week. I think there was a case last week that something like what I just drew now appeared on the charts. So I think this is it here. This is it right here. So it's also aligned with this trend line, the red line there, and the bounce of the black line. So at that point, one can be looking for buys, but then something happened. I don't know if this should be clear on the 15 minutes or if I should have just stuck to the 1 hour. Let's see what it looks like on the 15 minutes. So it looks quite clear on the 15 minutes. So you see a sweep of this low here, right? Maybe we should use a black line for it. You see a sweep of that low. So price broke this high. This is what you can want to see as a change of character, right? And then price created a low. That low is what you want to see as your structural liquidity. So price broke another high here, even though I'm not going to, want to mark that one, but let's just mark it. Broke another high there, and this is the one I also want to mark. Price broke this high. So the periodic break of the highs after the change of character shows bullish intent. So you just pay attention to your sweep. Once you have your sweep and price breaks up, then you want to see that this low is protected. So what you do is you want to trade in between that range. So if this particular structural liquidity was not created, right, then you might want to have seen price sweep below this low, you get. So you might want to just put in your buy position just below the structural liquidity, and then the targets can either target the previous high. It's a sign of a reversal, based on the higher time frame trend lines you can see there. So you might want to just target the overall high, which is this place. This is a fair target for it, right? And then you can see that actually played out. So this is a clear example of what I just showed you guys. So for the purpose of time, we are going to have to end it here. There were many other cases where stuff like this played out. So let me just share with you what I was able to see on gold so far. If you look at this area, we had a sweep here. You can spot the sweep. Yeah, you can spot that there's a sweep here. It was very clear. It was even with a wick, so that was fast. The moment you see a sweep, what you want to see is the next low, which is structural liquidity, which you can see here. I see structural liquidity being created. All right, and then you can also see that there is a low that is supposed to be protected because that low has already swept liquidity. Right, so in respect to that, you want to get your entry anywhere below the structural liquidity. Okay, so maybe something like this. What validates this basically? Some people don't like to trade internal structure. So sometimes I don't take internal structure, I take external structure. So if I was to go for external structure, this also gave external structure. It didn't break the eye. So you might now want to, look at this instead for structural liquidity because this did not break the eye, right? It was just an eye. But then there was a second break. Remember, when we have two breaks, we confirm a structure. So there was a second break that happened here, this leg up. All right, so that leg up was the one that actually broke the structure. So you can look at this rather as your structural liquidity instead of the previous one. Okay, and then your entry is just going to be anywhere below. So there's a little bit more to it, but I mean anywhere below is just it. You can cover the whole of the area if you wish. So just from there you can cover the whole of the area. Your choice. Sometimes I like to just bring it down a bit. And then the target remains the same. Target the overall eyes, and that's played out. So that's just one of the entry models that you can work with and see how far it goes for you. All right. So I want you guys to you can backtest this on your own and backtest it on your own. See how far you're able to come up with, how far you're able to master it. So that's just it. That's just it. Have you guys had an idea like this, or are you just hearing something like this for the first time? How has it been? Let me have some reviews. Have you known of this model? Have you traded something like this before? And if not, I would also like to see everyone backtest models like this and come up with something good for yourself too.